Ladies and gentlemen, my name is Greg Michalowski from ForexLive.com. This report is for January 23rd to 25th, 2015. I'm going to title it, It's the Euro-US Dollar's Turn to Take Center Stage. And indeed, this week, the Euro versus US Dollar did take center stage. Bond yields across the Eurozone moved to the downside. We saw the Euro versus US Dollar have one of the highest trading ranges going back to 2011, 570 pips in 1 week. For this month alone, the Euro's traded nearly 1,000 pips straight to the downside. We started the year at the high price, and today we made a new low, 998 pips from that high price. Amazing, amazing trending move to the downside here. All started yesterday when the ECB, or not yesterday, but at least we got another push to the downside yesterday. Huge move to the downside in the ECB's decision to do $60 billion of quantitative easing. All the risk is not over, however. We have the Greek election coming up this weekend. Expectations are that we're going to not have a leader by the time it's all done, that there's going to be further manipulation and forming of parties and such that could take us into next week or mid next week. So expect more uncertainty, and perhaps with uncertainty comes further bearishness. Certainly the market and the ECB and all the fundamentals are saying the euro should continue to go down, or at least have a lid on where it goes on any sort of rally to the upside. So where do we stand from a technical perspective? And quite frankly, the technicals have been working like a charm. Each level that the market goes through, it tends to go through, correct up to that level, keep a ceiling on the level, and move back to the downside. The lows in trading here today were another case in point. Our low for the day came in off the, if I put it to the hourly chart, down around the 111.13 level. What's the significance of that level? Well, if I go back to my PowerPoint, I actually have to bring up a chart that goes all the way back to 2003. Why? Because that's the last time the euro traded at these levels, was 2003. And if you go back and you look at these lows right here, these lows, this low in the month of July came in at 111.09. These lows back here in the month of September came in at 111.37. What was our low in trading here today? 111.13. Just above this yellow area right here, which dissected really a floor here. Then we broke below, and it became a floor again before we surged to the upside. That was the last time that we saw these levels down here at the 111.09 to 37 level, was in trading here today. And if we go back to our hourly chart and we take a look at our hourly chart and take a look at that 111, well, our low price came in at 111.13. Here's the 09 level, bounce off of that level back to the upside. Where's the 111.37 level? Right about here, and as you can see, we move right above that levels as well. What other levels are of importance here for the market? 112.09 level is going to be a key level in next week's trading as well. What's the significance of the 112.09 level? Let's go to our monthly chart. Take a look at the move up from the 2000 low to the 2008 high. The 61.8% retracement comes in at 112.09. Key level. Where are we trading at right now? Right about the 112.09 level. Once we broke above that level, we held the level right here. Now we're back down, tested it. So it looks like we're going to end the week right around where that 61.8% retracement is, waiting for the Greek election, waiting for the results to determine whether we go higher from here or lower from this level. So with the market closing near that 112.09 level, that 61.8% retracement of the move up from the 2000 low to the 2008 high, we have a nice little line in the sand that's going to be drawn right at that level for early trading next week. Move below it, more bearish. Move above it, more bullish. On the downside, we also know the 111.09 level, the 111.37 level. Those levels I outlined as low levels going back to 2003. What's below that level? Well, if we move below that 111.09 level, I'm going to draw a trend line connecting our most recent lows and suggest you do that too on the hourly chart. And if we look down here, that level is going to come in around the 111.80 or 110.84, I should say, and moving lower as each hour passes. So a downward sloping trend line watch that level for support. That would be our next target on the downside. Below that level, I've got to go back to our chart going back to 1980 or 2003. And if you look at the September 1st high, that level came in at the high came in at the 110.21 level, and that's going to be our next target below that trend line. So look for that. And if we break through that 110.21 level, well, we're back in another little island area down here where the low price came in at 107.59. Could it possibly head down to that level? With all the action that we saw in this week's trading, with a huge range that we had, I wouldn't put it past the market to continue that trend, especially given the fundamentals from the ECB and perhaps bearish fundamentals from the Greek election. So watch our levels and see if the market can get and stay below those levels like we saw in a lot of the levels on trading in this week and the week prior. All right, let's take a look at the upside. On the top side, if we move higher, the first level of resistance is going to come in at the 113.29 level, and then we have that 113.72 level outlined. That level was the low from November of 2003, and then above that level we have the 50% retracement at the 113.96 level. 100-hour moving average up here at the 114.97. Oh, don't forget the 61.8 at 114.63. Why is that level important? Because it also corresponds with our low price going back to January 16th. Any move above a 100-hour moving average will likely see some further short covering to the upside. Now we're into this range here that we had before the ECB meeting. I don't think that we're going to get up to that level, but if we do get above that 100-hour moving average, we're going to be looking toward that 116.39 level. That level corresponded with the 2005 low. Again, another key level that we move below in trading this week and pretty much stay below once we move there. So that does it for this week. My name is Greg Michalowski for ForexLive.com. It's been a long week, but it's been a fun week. I'm going to have myself a little Dr. Pepper. Have a great weekend. Bye-bye now.